If you've been following us for a while, you know that we cover an array of topics centered around business credit on this channel. But today, we're shining a spotlight on its equally important counterpart, corporate credit. In fact, the very building that I'm standing in front of was acquired entirely through corporate credit. But recently we've been noticing some comments and other resources out there that make it seem like business credit and corporate credit are the exact same thing. So we've put together this video to break down the differences and give you an in-depth look at what corporate credit is, how it works, and how you can get your hands on it to better your business. I want to welcome you back to our channel. I'm Zac Ricci, and thank you so much for joining me in today's video. If you're new here, I'm glad you stopped by to check us out because this channel is all about giving you the tools to start or grow your dream business. Now, we're going to start by giving you a simple explanation of what corporate credit is, and then we'll explain some of the jargon that surrounds this type of funding. So what exactly is corporate credit? Well, corporate credit describes a series of vendor-specific trade lines that are non-recourse, non-personally guaranteed, and based on your business's willingness to repay your debts effectively, instead of being based on your personal credit history. You can set up this type of funding at any time, but typically you're going to want some kind of cash flow or funding available so you start paying back these accounts on their 30, 60, or 90-day schedules. Now, the platform that you need to go through in order to build this type of credit is called Dun & Bradstreet, and they keep businesses organized by assigning each of them a DUNS number. So you may have heard scheduled payments, non-recourse, non-personally guaranteed, and realized, yeah, this kind of funding is a different animal than traditional business cards. And now let's go over some of the key terms that we're dealing with here. So first, you've got vendor trade lines. Now, these are trade references or credit lines established with suppliers and vendors that report payment history to the credit bureaus. You've got Dun & Bradstreet, or D&B, which is a major business credit bureau that collects and provides data on businesses worldwide. They issue the DUNS numbers, which are unique identifiers for businesses. DUNS numbers are essential for establishing credibility and accessing corporate credit. Now, your Paydex score is a business credit score provided by D&B that reflects a company's payment history with other vendors and suppliers. It ranges anywhere from 1 to 100, with higher scores indicating better payment performance. You've also got net terms. Now, those are payment arrangements with vendors that allow a business to pay for goods or services after a specified period, such as net 30, which means you pay 30 days of the invoice date. You've also got tiers, which refers to groups of vendors that are grouped into tier 1, 2, and 3, which basically translate like steps. So if you're new to corporate credit, you start with tier 1 and then continue to work your way up over time. So how do you get corporate credit? Well, unlike business credit, all you really need to apply is your EIN number and a DUNS number. Now, while that's all you technically need to get started, it's best if you have other factors that authenticate your business, like a business checking account, a publicly listed phone number, a website that's listed on Google, Yahoo, and Bing, just to name a few. And once you have this information, you can start applying with tier 1 vendors. Now, some of these vendors include Quill, which offers business and office supplies, electronics, and more; Red Spectrum, which is ebooks, logo design, web design, audiobooks, and much more; Granger International Supply, which has hardware, power tools, and more. And these accounts all typically have net 30 accounts, which means you have to pay the balance in full within 30 days. Now, if you use these accounts for a few months, then you can start to work your way up into the tier 2 vendors while still building up your Paydex score. Now, some tier 2 vendors include Home Depot, which of course they sell supplies for home improvement and building materials, but this could also be useful if you're a contractor or in a similar industry like that. You've got Maverick Office Supplies, which they offer business documents, courses, training, education videos, as well as office supplies and office furniture. You've got Staples, which is a standard in office supplies. You've got ExxonMobil, which has gas and offers rebates to save on gas if you've got a fleet of vehicles. Now, these accounts can offer net terms up to 60 days to give you a longer repayment term now that you've got some history established. And then finally, you've got your tier 3 vendors. Now, you should have at least 6 accounts reporting before you go on to apply for tier 3. And some of these include Gempler's, which has tires, outdoor workwear, safety supplies, pest management supplies, and footwear. hardware. You've got Platt Electric Supply, which is a wholesale distributor of electrical, industrial, lighting, tools, control, and automation products. They sell everything electrical that your business could possibly ever need. You've got Business T-Shirt Club, which is wholesale, custom, and pre-decorated apparel for businesses. And these types of vendors usually have up to 90-day net terms. And so once you reach this tier of vendors, it's all about building up from there because you've laid the foundation and now you just accumulate and grow your limits. That's how our CEO, Ari Page, was able to purchase this building fully using this non-recourse corporate credit. It was in no way tied to him or personally guaranteed. Essentially, what you're looking at here is a completely separate type of business-related funding that doesn't reflect on your personal credit, doesn't take your personal credit into account. It is a completely different type of funding than your traditional business credit cards, which would be from major banks like Bank of America or Chase or something along those lines. Now, yes, each of these vendors, these accounts are strictly to be used with them instead of a credit card where you could spend it wherever you want, but the benefits are there and eventually you can get up to giant credit limits that are still non-recourse thanks to corporate credit. And with that said, it brings us to the end of this in-depth look at corporate credit. I hope this has helped you better understand what it is, how it works, and how you can get your hands on it.